I have noted in the news all of this stuff about insurance this and insurance that. So I reached out quite a while back to ask Brian to join us to answer some questions. So my first question is, Brian Rauber was with a different insurance agency last time I talked to you. So tell us a little bit about what you were doing and the new company.
Yeah, thank you, Kim. So yeah, for 17 years, I was an agent with a captive carrier. And so that meant that I could only issue auto and home insurance and most commercial insurance with that specific carrier. And, the market dynamics have changed quite a bit over the last few years, and it just became more attractive for me to be in a situation where I had multiple carriers that I could offer to my clients. So I wasn't actually looking to leave, but was recruited by Capital Agency, and that's the insurance division of CapFed, the regional bank here. And with my background, obviously I can do auto and home insurance, hopefully in my sleep. But they brought me in to kind of start their commercial and builder's risk and Medicare divisions. So I've been here about a year and a half now, and it's been great so far.
All right. So we just purchased a home and used CapFed, and that's when I discovered that CapFed offered insurance. I didn't even know. I'm going to add some spotlights here. There we go. I'm going to add some spotlights. There we go. That way Zoom won't change us to somebody else's face. But I tried to do that earlier, and when there's only two of us, I guess Zoom Spotlight does not work. So we've learned that. So one of the first questions I had that I originally reached out to you was, some insurance company, not yours, was like, oh, we're not going to insure houses in California anymore. And then last week, we're not going to insure houses in Florida anymore. And I know, because I have insurance agents in the family, this is not a new thing, but should we be worried that our agency is going to say, we're not insuring anymore in Missouri?
Good question. So I'm going to say yes and no. I would not be remotely concerned that you're going to struggle to find insurance in either Missouri or Kansas or anywhere in the Midwest. Your family members or colleagues are correct that in times of unprofitability for insurance carriers, it is not at all uncommon for them to say that in Texas or Florida or California, we're not going to add new clients at this time. So that's not uncommon. What we are seeing now that I think may be kind of the new normal is additional underwriting restrictions. And specifically, we're seeing a lot of carriers, they're saying if the roof on your property, whether it's your personal residence or rental property, if it's over, say, 15 years, they just will not offer replacement value. I think we're going to see more of that in the very near future. The other thing, and this is very new, carriers are using more and more drone technology and satellite technology to take photos of the roof of a property that they may insure. And depending on how those photos look, they may reject to even quote the policy.
I know my husband was on his news feed this morning. We sat and read the news with the coffee, and he's like, oh, somebody's posting that my insurance is going to be canceled by Friday if I don't prove my insurance is, or my roof is this age. And I was like, okay, there, he was seeing that on Facebook or something. So, okay.
Yeah,
what about coming? So I've rehabbed a lot of houses. Mm-hmm. And I bought several houses from an investor that went in and put a brand new roof on 3 or 4 layers of roof. So Ooh. Talk to us a little bit about roofs, because I know as soon as we bought this house with the brand new roof, we ripped it off. Yeah. Because nobody could get insurance that we knew. But so tell us a little bit more about roofs and rehabbing houses.
Yeah. So you're 100% correct. I'm not aware of any carriers that would knowingly take a roof that had multiple layers of shingles. You may find an agent that doesn't ask that question, doesn't disclose that to the carrier, and depending on the exterior inspection that's likely to happen, you may get away with it. But again, no carrier that I'm aware of would knowingly take a roof with multiple layers. And just to kind of fast forward, if you did get by and got that policy issued and you had a claim, I do believe most carriers would go ahead and settle the claim because the agent put them on the policy. However, I think it's incredibly likely that the company would immediately set you up to non-renew, knowing that you had multiple layers of shingles. So at some point, you're going to have a problem.
Yeah, I think I've had it come up 2 or 3 times because we used to buy bank-owned properties and then just sell them to retail because really and truly there wasn't a lot wrong with them. But we had 2 or 3 houses that the lender required us to put a new roof on because the buyer couldn't get insurance without that. So
yeah.
Those are a big thing on rehabbers.
Absolutely. And while we're talking about roofs and like new underwriting guidelines, one thing I forgot to mention, a lot of carriers are putting more and more focus on tree limbs overhanging the roof now. And they're some carriers will go ahead and issue the policy, but you've got to get the tree limb trimmed back in a certain time frame or they will cancel it. And now a few carriers are getting more aggressive and just saying, hey, we're not even going to offer you a rate until you demonstrate that limb has been trimmed back. So these are new things that are going on in the industry that I don't think are going to change.
Yeah, I think the extreme weather is making disasters stronger. So we have to watch out for them. And that's one of the things we do when we rehab. Trees got to go. Our last house we just sold, we had 100-foot trees that were 80 feet from the house. So they weren't hanging over our house, but I was convinced if one of them went down, it was going to land on the neighbor's house or our house because they were 100-foot tall trees.
So you had those taken out?
House, we haven't gone by. We wanted to go drive by and see what happened last weekend to see if any of them fell it. Because I mean, they've been there for 50 years, but there's always time.
Yeah, well, you probably know this would be helpful for me, Kim, is that these guidelines are so new that I haven't had a lot of clients go through this yet. I mean, do you have an idea of what the average tree removal expense is?
We had a large oak tree in the front yard of our last house, and it had 4 or 5 limbs over our roof. And then we had another tree, which we didn't know was a cottonwood. And when the cottonwood blew over it wasn't even a big storm. It just one day it fell over. We had them come out and it was $400 to clean up that tree. And I think they charged us like another $1,000 just to delimb the big oak tree that were over our roof. But we had a lot and they took a lot down, but we knew that because the oak tree was old, it had been stressed and it was like a limb down on the roof. We saw it on the news this past weekend. Limb comes down on roof, comes down on a car. It's not good. So
yeah. Well, that's going to be an important consideration going forward for the real estate investors in here. Is that obviously margin is the key, and they're going to have to start building into the equation how much it's going to cost to get those limbs trimmed back, because it will prevent them at some point in the near future from getting insurance.
Very much. So let's talk about our rental properties. Well, let's stick with the rehab properties for a minute, because we were at the rehab class and we're like, yes, you don't want to put landlord policy on your rehab or your wholesale. You want to put builder's risk. So what's the difference between the two policies? Why do we want builder's risk? So let's put some questions in here. Why do we want builder's risk?
Yep.
How do we know how much to insure it for? And if there is a claim, what does it pay for?
Perfect. Okay, I'm just taking notes here. So why builder's risk? Builder's risk is a policy specifically designed for properties undergoing renovation. So the carrier knows that this is a property that is being renovated. So there's no concerns with that. It covers the structure of the property itself. It'll cover building materials. Basically, if it's in the house, it's going to be covered. What it doesn't typically cover is liability. So kid playing in the yard gets hurt, that's not covered. Worker gets hurt on the property and decides to sue the property owner, that's not covered. Where it differentiates from like a landlord home policy, like you're talking about, most carriers won't knowingly issue any type of homeowner's policy if they know renovation is happening. There are exceptions to that. There are a few carriers that, as long as it's minor renovation and it's only a couple months and you've got a tenant lined up, they're comfortable taking on that risk, but that's kind of few and far between the carriers that will do that. And what you're risking is if you go ahead and start with the landlord home policy and you have a claim, in most cases, the carrier would be within their rights to deny the claim.
So I know we always advise, because we do a lot of marketing to homeowners, that grandma moved to the nursing home and we're sitting there holding grandma's house for the one next to me they were going on 5 years of a vacant policy. And we kept telling them, make sure you have the right insurance, because if your house burns down or that giant tree in the backyard falls through the roof, I don't believe you're covered unless you have a vacant policy, which is also a builder's risk policy. So
yeah, and it gets even further nuanced. So there's builder's risk insurance for properties undergoing that renovation. There are actual vacant home policies, and then there's the traditional standard homeowners policies. A vacant policy can be for a property that is undergoing no renovation whatsoever, but is just vacant for whatever reason.
So like your snowbirds should probably have a vacant policy while they're gone for 6 months, or at least talk to their insurance person. Absolutely.
Talk to their insurance person. I don't want to jump the gun on your questions, but I know one of the things is dealing specifically with vacancies. On all homeowners policies, there's a vacancy clause. Now the clause can vary by carrier, but I would say in most cases, if you've got a homeowner's policy and you go 60 consecutive days with it unoccupied, so vacant, at that point, the policy will start excluding coverages. And every carrier I'm aware of, after the 60 days, will exclude theft and vandalism. So if somebody comes in, breaks the pipes, steals the copper, that kind of thing, it wouldn't be covered. But that's the minimum that would be excluded, is theft and vandalism. I mean, there are carriers that will exclude more. So it's very important that if you've got a property that's going to be vacant for an extended period of time, to communicate with your agent and understand exactly what your carrier would cover.
We had that come up many years ago. A landlord, he tried being a landlord, didn't like it, decided he was going to sell his rental property. He had landlord insurance on the property. It sat vacant it was a good 6 months to a year. And then it was 6 degrees outside and the pipes froze, and he called up his insurance carrier and they're like, sorry, buddy, we won't cover anything because it's been vacant for more than 6 months and we can prove it. So if you have rental property and you've got insurance right now, but it's sitting vacant and you're going to sell it, you need to get your insurance switched.
Absolutely.
So let's stay on the rehab properties there. How much? So I buy a house. Let's say I buy it for $250,000 and it's worth $399 when I get it all fixed up. What should I be insuring it for with that builder's risk?
Yeah, great question. So the first thing I'll tell you is the market value or after repair value is not particularly important to me or the insurance carrier. What I definitely want to know is how much you paid and how much you're going to put into the renovations. Because at the end of the project, if the last day you've got the thing totally built or rehabbed and it burns down, we want to make sure that we can, get you the money that you need to rebuild it. But that's the rebuild value is, obviously separate from market value. We are seeing more carriers now that are somewhat dictating how much you have to insure the structure for. In the past, we could kind of go with whatever number we wanted, but now more carriers are starting to say, hey, this house is 1,500 square feet. We're not going to let you insure the structure for 50,000. And like, no matter where it is or how bad it is, it would take more to just replace that structure than 50,000. So we're seeing more and more guidance from the carriers encouraging you to insure it for a certain amount.
I know when we were insuring those $50,000 houses, we weren't insuring them to rebuild them. We were insuring them to tear them down and leave a vacant lot, and then we could sell that vacant lot, but at least get our money back. That was our only consideration. But now in these higher dollar houses, I'm sure we need replacement costs.
Absolutely. Yeah. Well, I say absolutely. I would want it if I were doing the project.
Okay. So I'm going to switch over to our renters properties for a minute. As a landlord, I know a lot of people have, their 10 properties or 20 properties, and they're just going along with their insurance. How often should we get that reviewed to make sure that we have, especially right now when while I know the tax assessments are wrong, I know our values have gone up considerably in the last 2 years. So cost builders. So how often should we be checking to make sure we have enough coverage?
Yeah, I mean, I'm the kind of person I would check every year, but certainly every couple of years. Most carriers will have a built-in sort of inflationary increase in the dwelling coverage. So you're probably safe with most of your like standard carriers. If you're with an insurance company that like broadly people know the name of, that carrier is probably increasing the dwelling limit on the coverage of dwelling coverage on an annual basis. So you're likely safe. One thing I would definitely encourage, which is slightly off the topic, is I would be checking the liability coverage limit that you have, making sure that, a lot of standard liability limits on properties are 100,000 or 300,000. Is that enough? Should it be 500,000? Should you have an umbrella policy that goes above and beyond that? And then, if you are an investor, do you own that property in an LLC or is it insured in your personal name? And Kim, that's true for builders risk policies as well. When I talk to new flippers, that's one of the conversations I have is, if they want to insure it in their personal name, I encourage them to maybe put it in an LLC so they're protecting their assets in that way. And then we can help them on the insurance side to, protect their assets in the other way.
So another reason that I had reached out to you was I guess over 4th of July, there were 2 or 3 houses in the news that burned down. One of them was a rental property by a local investor. And so everybody worries, our house is going to burn down. So as a landlord, I need my coverage, which we've just kind of talked about. But what about the renter? So the renter is okay, but where do they go live until they find a new house? Who pays for that? Whose insurance is going to cover it? What do we need to know about that?
So the property owner, they've got a loss of use coverage that would pay them for their lost income. The renter or the tenant, hopefully they have renter's insurance. And if they do, they would have loss of use coverage that would pay for them to stay somewhere else, during the period of reconstruction. So definitely the renter needs to have a renter's insurance policy.
So that's something you really should make sure that your tenants have before they move in?
100%. Like I would make that a requirement in any lease agreement that the tenant has renter's insurance. And it's not just a protection for them, which is great, but if they do something that burns down your house, if they've got liability coverage, the policy would pay for that. So that would be a non-starter for me. I would have no tenants whatsoever that didn't have renter's insurance.
All right. I know we had this over the winter. They were talking about some apartment complex where the pipes were all broken or frozen, and all the renters had to go find some place to live. And they're like, well, if they would have had renter's insurance, that would have covered it, correct?
Yeah, would have put them up someplace else.
All right. So, okay, I've kind of talked about, we just talked about that. If the house is a total loss and they have to move out for a while, insurance will cover this. That was one of my questions.
Yeah, and Kim, let me jump in and talking about valuations and how much to insure properties for, especially as investors, grow their book of business, so to speak. No one wants to pay more than they need to for insurance, and one of the ways you can kind of cut corners or save some money is insuring properties for less than their reconstruction value. That I would definitely discourage. It's good to save money, but if you have a claim like a massive water loss or a fire, you want to have enough to rebuild that property, to new, so to speak. And if you insure it for less, it won't be enough to rebuild it. And then most policies will have a co-insurance clause in them, to where if you're not insuring it for at least 80% of the replacement value and you have a loss, there's a co-insurance penalty. So you start dramatically getting less money to settle the claim if you're underinsuring the property.
So that's if we're doing one property at a time. I know I had several rentals at one point, and the agent at that time suggested a blanket policy, that it was cheaper. But I don't know if that was giving me full replacement value on every property. I mean, because they're assuming that if you have, say, 20 properties, then not all 20 of them are going to burn down on the same day, only one. So how would that work?
Depending on, I'm familiar with some of the kind of blanket providers out there, and have worked with some of them. Most of them, even though it's a blanket policy, they'll still have individualized limits on the property. So it's really more of a, hey, I have one bill that I pay for my properties, but each property really has its own distinct coverages. I will say I'm cautious with a lot of the carriers that offer those, because they will insure it for dramatically less than it's worth. And when you have a claim, I'm not confident that they've explained, what kind of coverage you're going to have.
Okay. All right. I know I've covered a lot of our questions that went faster than I thought, but what are the investors asking you? So when an investor is calling you up and going, help, what are the questions you're getting right now?
Oh, think about that. I mean, again, no one wants to, I totally get it and feel the same way. No one wants to pay for coverage they don't need. So it's how little can I insure the property for? How do I minimize my expense? So that's a common question. And again, I kind of run through, if this thing burns down, what are you trying to recoup? Do you want to rebuild it? Do you simply want to get what you've put into it and bulldoze the thing if something happens? Having those conversations on, not so much on builder's risk, but on rental properties, having more and more investors that are going with high deductibles, so 5,000, 10,000, limits like that's definitely a good way to reduce your premium. And many investors have relationships, obviously, with contractors, and if they need to replace a roof, they can probably get it at a better than retail price. So to an extent, maybe they're self-insuring or partially self-insuring the value of the roof. But that's a way to control premiums as well.
And what about claims? So I know with builder's risk, we had many an air conditioner stolen, and we never ever told the insurance agent. We just went out and bought another air conditioner. When should we file a claim, and when should we just eat it and not file a claim?
Yeah, if it's not at least in most cases, if it's not double your deductible, I probably wouldn't file a claim. That if you've got a $10,000 claim or deductible, that may be a different conversation. But if you've got $1,000 deductible and it's a $2,000 loss, I would eat that, especially in today's market. It is absolutely a very hard market in the insurance industry, and we don't see that changing, at least for a couple of years. So the carriers are actively looking for reasons not to write new business right now. And like you said earlier, Kim, State Farm's not doing new business in California. Farmers has pulled out of Florida. Nationwide insurance is like literally nationwide, making it very difficult to write new business. So all the carriers, and I know no one feels sorry for them, they are unprofitable. So if they can find a reason to get rid of clients right now, they're going to do it. So that's a conversation I'm having definitely with clients, is if you've got a claim, what is worth turning in versus, what are you willing to eat?
Okay. And then we see in Florida, they have to have government insurance for flooding. I'm sure we have flood insurance here as well. But for example, tornadoes, are there special policies we need to get for tornadoes? Or I don't know, some of the storms that we're having of late, are those normally storms that are normally covered, or is it like act of God, once in 1,000 years, is never going to happen again? We don't cover that. When do we need to be worried here in Kansas and Missouri?
Your standard policy is going to cover any kind of storm related damage. There's two major exclusions, obviously earthquake, which is fortunately not been a big deal around here in a long time, but it
There were
would
4
not be
earthquakes in
covered.
Missouri yesterday.
Well, there you go. Okay, so earthquake is excluded. So that's something you would need to add, if you want it. And then obviously flood. And flood is water. There's distinctions in the insurance world. Water running into your house from the outside. So I see a question came in. What's the best way to insure against rainwater damage to the basement? So again, that gets into the distinction of, if it's rain that comes in from the outside, you would technically need flood insurance. On the flip side of that, if it's rain, if your sump pump stops or just is overwhelmed and water flows in to your house from the sump pump, there are endorsements that you can get that would cover that. But again, that would be on an endorsement basis. The standard policy itself would not cover that.
So we would, if for water coming in, we really can't cover against that. We're just stuck, or we'd have to have a special flood insurance policy for rainwater coming in.
Correct.
I've got to figure. I'm in a brand new house and they're building a house next to me.
Yeah.
And they haven't put the yard in yet. So they're trying to divert water. And the more they do to divert the water, the worse they're making it. And the closer, I'm like, one good rain and it's in my basement. And I am just waiting. But it's not my problem. I guess their insurance, or I guess their liability insurance would have to cover it because it's their fault. But I don't know.
That's a tough call, Kim, there. I mean, that you would definitely have to be able to demonstrate that it was their fault and that they not necessarily knowingly caused it, but
pictures.
Yeah,
I have everything they've done, and I'm like, everything they do makes the water come closer to my house.
Yeah. And
they're trying to make it go further away. Which brings up the other question we were talking the other day: trees falling on cars. So if my tree falls on the neighbor's car, will my insurance cover the neighbor's car if my tree falls on it?
So this is, people don't ever like this answer, but I'll say claims is more art than science. So if you go by the book, if you're the owner of the tree and the tree is, appears to be alive, flourishing, whatever, and a limb falls off, by the insurance book, that's not your fault. You couldn't have known that that was going to happen. If the tree was, clearly dead or dying, a limb falls off, again, by the book, that would be your fault. You should have known that the potential liability or negligence existed there. All of that said, we certainly see cases where, hey, I had a live tree, fell on my neighbor's car, fell on my neighbor's fence, fell on my neighbor's house, and I feel bad about it. I think my policy should cover it. We see that happen all the time. So I wish I could give you a black and white answer on that, but it's not handled in a black and white fashion.
Yeah, we were talking about that Saturday after all the limbs fell. Like, who pays for the limb falling? Whose limb was it? Where did it fall? I guess one of the investors said that the tree fell. It was a neighbor's tree, fell on the ground. The neighbor dragged the tree into his yard to let him deal with it. He's like, wasn't my tree.
Yeah.
So Jane has another question. We had a case, our insurance covered. So we had this case, insurance covered without deductible.
Yeah.
It was a
Yeah. That would be a liability issue. So the deductible would not apply.
All right. Well, any other questions that you're getting from of late? Like, I know we had a lot of tree limbs down, a lot of wind damage. So I bet you had a lot of questions last week.
Had a lot of potential claims. Fortunately, not as many as you would think. I do want to jump back on the builder's risk just because we have time. And I think it's important especially for new investors to understand builder's risk insurance, how long it lasts. So you can typically get 3, 6, 9, 12-month policies. In most cases, you can get an extension if you need it. That said, the extensions, they typically charge you more than they do for the upfront policy. So I encourage people, if you've got a project, hey, I think I'm going to have this house, I'm going to have the work done in 5 months, and then I'm going to sell it. I would recommend that a 6-month policy may not be adequate in that case because sometimes work doesn't get done as quickly as you think, and then you've probably got a month to close. You got to build in time to have it on the market. So I encourage people to go a little longer than on the policy term than just the amount of work time. In terms of when builder's risk policies terminate, it's the earliest of either the policy term. If it's 6 months, it's 6 months and it's done. A tenant occupies it. As soon as someone moves in, the policy is void. And
so if we got a 6-month policy and then we wholesaled it in a week, and then all of a sudden can we get a refund back of policy, or are we out that money?
Depends on the carrier. And I will say most of them are fully earned premium. And so in that scenario, you would have lost, you're not going to get a prorated refund.
I know we had a person we worked with many, many years ago that he kept giving us the refunds, and that's how he kept going, watching how many houses we buy and how many he would refund. And he finally said, okay, I want to be a real estate investor. I don't want to be an insurance agent anymore. So he started funding our deals for a while. Yeah. And then he decided to be an airplane pilot. But hey, you can do that too. All right. Well, let's see. The other question that kind of comes up is you've got a regular landlord's policy, which is for a fully occupied, rented all the time rental, and then you have a builder's risk for vacant. What do we need on an Airbnb property that's vacant sometimes, but occupied sometimes, and occupied by a different person every time?
Yeah, that's a good one. So you would get a standard landlord home policy with an endorsement, or at least an acknowledgement from the carrier that this is a short-term rental property. So there are carriers out there that have that endorsement available. In terms of, the policy language is still going to say landlord home, but it's critically important that it has that endorsement on it.
I know the first time I asked that question was when Airbnbs were fairly new and there was no insurance agent that could answer my question, but you've developed products for this now, and now you need it. So.
Exactly. Always late, but we get there.
All right. Well, I think we've covered most of our questions. We can only talk about insurance so long,
Yeah.
or we'll fall asleep.
Yeah. I hear you.
And hopefully we made it interesting for everybody. So I want to thank you. How do we get in touch with you if we want to ask you more questions? How do we get in contact with you?
Absolutely. Phone number is 913-652-2251. Email address is first initial last name. So brauber@capfed.com.
Okay. Capfed.com. Who knew? They do banking. They do insurance.
Exactly.
So we'll
One-stop
be getting
shop.
homeowners insurance from Hy-Vee soon then, huh?
Yes, could be.
Start doing mortgages now too.
I hope not, but could be. I've got enough competition, Kim. Don't get my ideas.
You never know. Well, Jane says, thank you so much. Jane, thank you for joining us from, I believe she's out in California these days, but she was a local investor and has local rentals. So please post contact information in the chat. And when I try to type, my computer screen goes away. I'll let you type your phone number in the chat.
Yeah.
And your phone number, your email. I touch my screen keeps going away. I hope it's me and not you. I hope you have good internet connection because my screen keeps getting stuck. My internet's been wonky since the storm. So,
Oh, geez.
I don't know. There we go. Got them in the chat. So save your chat, everybody, if you need it. Got both of them.
Perfect.
And then I will, when I post this replay, I'll put that in there as well. So thanks everybody for joining us. I'm going to go ahead and end it for now, and I will see you all at Mary in a couple weeks.
Thanks, Kim.
Thanks.